Hey guys, we're almost at $300,000 in the stock market portfolio, but today we're gonna take a look at something that could seriously impact our stock market gains for decades to come. So let's talk about a major shakeup that could be coming to Wall Street. Just this past week, President Donald Trump renewed a call to change one of the bedrock rules of the US markets. Well, think about it right now, guys. Public companies right now have to report their earnings every 3 months. We call those the quarterly earnings reports. But Donald Trump is pushing for something quite different. He wants companies to only report earnings twice a year. That would be every 6 months instead. Man, we're doing some hard math in this video already, guys. Hopefully you're keeping up. He even posted on the very reliable Truth Social saying that this move would save money and allow managers to focus on properly running their companies. And guess what? The SEC, or the Securities and Exchange Commission, is taking this seriously. So let's talk about what's happening now. Let's talk about some of the pros, some of the cons, and I'll finally give my opinion at the end of the video. So what's happening right now, because this is not just talk, the SEC under Chairman Paul Atkins is prioritizing this proposal. His staff is already working on recommendations. Things like simplifying disclosure rules, easing burdens, especially for smaller and newer public companies. Atkins himself has welcomed this idea. It's been discussed in open meetings, and while it's not final yet, it's definitely on the table. But here's the catch, guys. To actually make it happen, the SEC would have to go through its full rulemaking process. This includes drafting rules, opening them up to public comment, reviewing feedback, and then of course voting. That means we're still a really far way from this actually happening, but it is starting to get steam. It is starting to move. So let's talk about some of the pros, why some people like it. What are some of the upsides of reporting every 6 months instead of every 3 months? Well, for the first one, it's going to be less quarter-to-quarter anxiety. Right now, CEOs, let's think of it like this metaphor, guys. They are like bands that are forced to play a concert every 3 months. Now, instead of writing good music, they are focused on putting on a quick show. If you stretch it out to 6 months, they have time to rehearse, compose, and deliver something meaningful. Companies would have way more runway to innovate and plan long term. Guys, basically, by decreasing the frequency of these meetings, this will hopefully give companies more long-term potential to work on their business plans and not be tied up in the day-to-day of having to deliver short-term results in quarterly earnings. Let's also talk about one of the biggest ones, guys, is the cost savings. Quarterly reporting is not cheap. You need auditors, you need accountants, lawyers, investor relations, staff, all working nonstop to prepare those reports. Cutting the workload in half could save so much money, millions of dollars for small companies that don't have armies of accountants or just unlimited resources. This could save so much money. Now, I personally am an accountant. I know how many hours we work around every quarter close. It is so many hands on deck. That's when everyone's working overtime, is super stressed out. And this includes upper management, investors. Oh my gosh, so much work is put into these quarterly earnings reports. Third is alignment with some of the international norms that are starting to happen. Already in Europe, many companies have already shifted from reporting from every 3 months to every 6 months. And guess what, guys? It hasn't crashed their markets. This has been the case since at least 2014. In fact, some still choose to update quarterly, but the burden is much lighter. So I really like that, guys. In Europe, they still left the door open to report every single quarter if they still wanted to, because a lot of investors were still anticipating those quarterly updates. And of course, there's the regulatory reform. Trump's administration is big on cutting back the red tape, and this fits right in. Fewer reports, less paperwork, more focus on actual business. But of course, guys, there's going to be a lot of people screaming out all the cons, why this is terrible, and why there's some big risk in what Donald Trump is proposing. First, there is much less transparency. If companies only report earnings every 6 months, investors are left in the dark for such longer stretches. If something goes really wrong, shareholders might not know for half a year. and that could lead to massive, massive stock shocks when the truth finally comes out. And if you thought the stock market was already very volatile with quarterly earnings reports, can you imagine how much stocks could possibly move if they now have to recap 6 months of activity versus 3 months of activity? Second, this could hurt the very small everyday investors like you and me. You see, these big hedge funds, these big institutions, they have access to all sorts of private data, analysts whose full-time job is to cover the company, and of course, insights with their technology. The average investor, they don't really have any of that. All they have to rely on is a public earnings report. So fewer updates could really tilt the playing field even more for the big Wall Street elites. Let's also talk about the market expectations that they might not change. Even if the SEC relaxes its rules, a lot of companies, they might still report quarterly earnings just like in Europe. And this is because analysts and investors, they demand it. They put this pressure on publicly traded companies to report earnings every single quarter. In that case, a new rule isn't going to really change much. And of course, lastly, there's going to be bigger blind spots. With 2 updates a year, a poorly performing company's executives could coast a lot longer before anybody catches on. There's less accountability and potentially more mismanagement slipping under the radar. When you have to be accountable less times a year, you're probably not going to be riding that ship extra tight, making sure that everything is secure. And this is where things could go wrong. Where are we headed, guys? Right now, the SEC is in the middle of drafting proposals. If it moves forward, we could see formal rulemaking kick off in the next few months, and some have even suggested that the change could be phased in by 2027. There's also talk that companies might be given a choice. They could report every 6 months if they want, or they could stick with the quarterly earnings like we talked about if that is what investors expect. That flexibility could mean we could see a split. So this could mean some companies report every 3 months while others are every 6 months. Some companies might be slowing down, others are just keeping up on the traditional pace. This is going to be an ongoing debate for quite some time. It isn't just about paperwork, it's about how we measure value. Do we want our companies acting like sprinters, obsessed with hitting numbers every 3 months? Or do we want them acting like marathon runners, focused on the long-term endurance, even if it means less frequent check-ins? Changing the report cycle could shift investor behavior too. There's a lot less speculation on quarterly numbers, more emphasis on sustainable models. It could also change how analysts value companies, how executives plan strategies, compensation packages, and ultimately how our economy grows. So guys, what would I prefer? I think I hinted earlier that my opinion is very biased, right? Being in an accounting, working in this field, I definitely love the job security of reporting numbers every 3 months. But as an investor, which I'm a big investor, guys, I also love quarterly earnings reports. I love to see more transparency. I want to hear how my companies are doing sooner rather than later. I also just think there's so much shady business going on these days, so many bad actors out there, nefarious people, that I love the accountability. I love the visibility. I want that news now, and I don't want to wait. I also love the volatility. I play a lot of options with quarterly earnings, so only being able to do that every 6 months, that would really suck. Either way, guys, this could be one of the most significant changes in the US financial markets in decades. And if it goes through, it won't just affect CEOs and Wall Street analysts. It'll affect every single investor out there. So what do you think? Should companies keep reporting every quarter, or is it time to slow down the beast and go semi-annual? Thank you again to everybody that leaves a like and leaves a comment. Thank you to all my Patreons who make this channel possible, and I will catch you on the next one.